Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 24th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. As Mondays go, not a whole lot of economic data today. We do have Fed member Kashkari speaking on several different occasions, and last night had the big French vote for first round of presidency, and the markets blasted to the upside and gapped higher as they are, I guess, voting for change with Macron or something like that. So rather than Le Pen. So that's causing the markets to really push higher, but we've seen a bit of a comeback since that the opening this morning, and we'll go into that here in a little bit. But we got crude oil not really trying to make much of a rally with the broader markets. The stock market's not really connected to oil today, as oil is down and the equities are higher. Generally speaking, we see those kind of move lockstep for the most part. But crude oil, coming back to this volume node, looks like it could easily want to come down to the value area low, but with this being a high volume node, it could be very comfortable there too. So pretty wishy-washy on crude right now. This is gold futures, as gold was really selling off this morning because of the equity rally and that pop higher. Now that the equities are coming off a little bit, gold finding a little bit of some upward momentum, if you will, pushing away from the point of control as the equities come off. Then we have we got the Dow Jones Industrial Average up over 200 points. As you can see, this is the gap higher from last night's vote. This caused the overall equities to rally. So the futures, which were trading, also even gapped higher as well. As you can see here with the NASDAQ up over 61 points, creating an all-time historical high. Not a whole lot of volume going on with this big rally. It is a bank holiday over in New Zealand and I believe in Australia, which could be adding a little bit to this lighter than normal volume. But keep in mind, it is a Monday, usually low volume days, and low volume rallies like this have a tendency to be a little bit overdone. So just keep that in mind. But NASDAQ, really trudging along right now. This is what I was speaking about with the E-mini S&Ps kind of taking back a little bit, about half of the day's gains. It looks like on the chart anyway, but it's not really that, because we are, up from the close here. So the market has given back the intraday gains by about half anyway. So up 22 on the day. We'll look at it on the breakdown of the 15-minute chart. As you can see here, market rallied higher off the open. We just started selling off, kind of getting a dead cat bounce right now, as you can see here. But the market up still 20 some odd points. Let's get on to what I'm working on right now. I'm trying to get out of this TLT. As you can see, TLT is really getting this volatility crush happening right now, kind of breaking down into my middle of my range. And if you remember, I have on the May 118, 128 strangle. Originally collected 99 cents for that. I'm trying to get out of it right now for right around 44 cents. It's trading around 46. So I'm pretty close on that one. Get any more volatility crush, I'll be able to get out of that trade today. Then with XLU, this is one that I got out of on Friday. I talked about getting out of this one a little bit earlier. Got out of it for a slight profit, but after commissions, it was probably a scratch, which is a win in my eyes. IBM, I decided to go ahead and go long with this stock. I have the stock put to me at 165, so I am long at 165. So today I went in there and covered those longs in IBM and sold the 165 calls, collected 38 cents for those. So if I get up to there, then I'm at break even, been able to collect some credits. So it'll be ahead of the game anyway for IBM. So covering calls, lowering basis, and buying myself some duration. Same thing with Whole Foods. Whole Foods obviously spiking quite higher. I thought we might be getting a little overdone to the upside. As you can see, the volume profile is pretty thin up there, it being the 52 weeks highs. Just thinking with this massive rally that we've had going on here that we could see a bit of a pullback here ahead of those earnings, which is what I'm looking for anyway. So I decided to take this on as a short. So now I'm short Whole Foods at 34.5 and decided to go in there and cover those with the May 34 puts and was able to collect 51 cents for that. So covered put strategy there, lowering the basis, trying to increase the probability of profit there moving forward. And then finally, well, I think that's actually it. Yeah, so that's about it for today. Friday's webinar is going to be on earnings strategies. We've done a couple of them already. This is the third part series. It's going to be a 4-part series. So check that out because that's going to increase your probability of profit with these earnings setups. All right. If you can't take that, take it easy.